The fuel price situation in South Africa is currently facing what analysts call a perfect storm, with a massive hike scheduled to take effect on Wednesday, April 1st, 2026. Following a relatively minor increase in March, motorists are bracing for some of the largest single-month price jumps in the country's history. The projected hikes, April 2026. According to the latest data from the Central Energy Fund, CEF, the expected increases for April are as follows. Petrol, 93 and 95, expected to rise by R4.40 to R5.10 per liter. Diesel, 0.05% and 0.005%, expected to rise by a staggering R8.05 to R8.60 per liter. Illuminating paraffin, expected to increase by approximately R6.60 per liter. In coastal areas like Cape Town, this will likely push the price of 95-octane petrol toward R23.50 per liter and diesel toward R2500 per liter. Why is this happening? The surge is driven by a combination of three major factors. 1. Geopolitical conflict, the global driver. The primary driver is the outbreak of military conflict between the US, Israel, and Iran that began in late February 2026. This led to the closure of the Strait of Hormuz, a critical shipping lane that handles roughly 20% of the world's daily oil supply. As a result, international Brent crude oil prices spiked from around $69 per barrel in early March to over $115 per barrel. Global supply chains have been upended, leading to physical shortages and under-recovery, where the local regulated price is far lower than the actual cost to import. 2. Currency volatility, the local driver. Global investor uncertainty surrounding the Middle East conflict has caused a flight to safe haven assets like the US dollar. This has hit the rand hard. The rand has weakened from under R$1,500 earlier this year to approximately R$17.20. Because South Africa buys oil in dollars, every cent the rand loses adds direct pressure to the pump price. 3. Annual tax adjustments, the regulatory driver. April 1st marks the start of the new fiscal year, which includes the government's annual tax increases announced in the February budget speech. Fuel levies, adjustments to the General Fuel Levy, GFL, and the Road Accident Fund, RAF levy, will add roughly 21 cents per liter. Carbon tax. The carbon fuel levy is also set to increase. Combined, these taxes and levies account for nearly a third of the total price you pay at the pump. Current market status. There are already reports of diesel shortages in parts of the Western Cape, with some agricultural suppliers limiting sales as they manage limited stock ahead of the April 1st adjustment. The government has urged motorists not to panic buy or hoard fuel, though the financial impact on transport and food prices is expected to be significant throughout the month of April.